Oil prices have been relatively volatile over the last couple of days, because last week we saw it heading around $16 a barrel and now sitting at around $111 a barrel. Worries in Iran, of course, issues with regards to the fuel subsidy in Nigeria, all affecting sentiment towards the Brent crude price.
So definitely we have seen the oil price being fluctuating around above that $110 barrel level, largely, like you mentioned, on the back of those issues coming out of Iran, largely being the key driver of the higher oil price that we have seen over the past week or so. And it's been an issue of supply source shortages and how that may impact the global oil market. So with Iran is the world's third largest oil exporter. It's the second largest OPEC oil producing country, so definitely being a key driver in the global oil market. Iran produces, at the end of last year, it produced around 3.5 million barrels per day. So definitely a key player in the oil market, and as such, it explains how it impacts the oil price.
Absolutely, and as you mentioned, the second largest OPEC oil producer, we have the European Union just moments ago saying that we should see the EU launching a full embargo on Iranian oil. This is a very big concern. What does it actually mean for the oil price going forward and for OPEC producing countries as well? Because then it will skew the supply that we're seeing from OPEC.
No, definitely. If we have to just look at Europe accounts for around 20% of global oil demand, so definitely it's a key player in the global oil market. So if a complete embargo on Iranian supplies will definitely have a key impact on the oil price. We will see a complete embargo would mean that other OPEC oil producing countries will have to come up and make up for the lost output from Iran.
Is there enough capacity to increase supply though?
And I think that is exactly the issue. Current capacity is standing at around 4 million barrels per day. So if we take the 3.5 million barrels per day out of that capacity, definitely will pose very sharp upside risk to the oil price.
With regards to what we've been seeing in the overall commodities basket, and I was just speaking to Judy Padiachi from a technical perspective, not really sure whether we've hit the bottom as yet on the overall commodities basket. Do you agree with that? Do you think that we could actually see some more pressure coming through for commodities as a whole? China out with fourth quarter GDP numbers sitting at 9.1% growth, 8.9% growth. It's not such a bad number.
Yeah, so four key themes will drive commodity prices over the next year. Firstly, slower global growth on the back of European concerns. Secondly, the dollar will be a key driver of commodity prices. And then thirdly, inflation concerns will be also lower inflation is expected. We typically know that commodities are typically seen as a hedge against inflation. So views for inflation to fall across developed as well as developing economies will definitely pose downside risk on commodity prices. And then fourthly, speculative activity will continue to be a key driver of commodity prices as a whole, with low global interest rates on the back of easy monetary policy in your developed as well as developing economies will definitely fuel a global liquidity, and as such investors will pile into commodities as an alternative asset. Yeah. And our view on the whole for 2012 is for a tale of two halves, where we see commodities definitely downside pressure in the first half of the year, and however in the second half of the year we expect the dollar to weaken slightly on the back of as tensions in the global market tend to ease. So those factors definitely being positive in the second half.
So you still see a strong correlation with regards to dollar weakness and commodity strength going into the second half of the year?
Definitely, dollar being a key driver, most commodities denominated in dollar terms. So the dollar will continue to be a key player of
It's interesting because sometimes we don't see that correlation, especially when you look at the gold and the platinum price. But platinum still is trading at a discount to gold. Do you think that is going to reverse going into 2012?
I think on the back of slowing global conditions, platinum being exposed used as an industrial metal will definitely be impacted by slower global economic conditions, and that should continue to weigh on demand prospects for the metal, and it should also we should see that continue to trade at a discount to the gold price.
With regards to what we've been seeing on the copper market as well, we've also seen a bit of volatility, but we also had supply constraints last year that started to elevate the copper price. Do you think that those issues are now out of the system and we're looking at more sustainable copper prices?
Now into 2012, for the rest of the year, we remain fairly optimistic on the outlook for the copper market on the back of even though slowing demand conditions will weigh on the copper market in the first half of the year, supply constraints should remain, and that should continue to support the copper price for the most part of the year.